Hey everybody, it's Jeff from the Brantford Realty Group here. We're back for another Mortgage Minute. I'm here again with Yark from New Door Mortgages. How you doing, buddy?
How's it going, man? How are you?
I'm doing good, Just I just got a few more questions from some clients, so I thought, hey, I'm going to reach out to you and see if we can get the right answers and point them in the right direction. Because every time, I think you guys are mortgage wizards, so I don't like to step in where I don't belong. But so yeah, the topic I really want to talk today about is sort of the options for down paying your mortgage faster and what are the benefits and stuff like that. So I thought maybe we'd start off and you can tell us about a few avenues on ways to pay your mortgage down faster. So let's just start out with that.
Awesome. Yeah, it's a great question. So I mean, I think that's one of the biggest questions that first-time homebuyers come to me and say, like, I want to pay this down, and I'm like, okay, how fast do you want to pay down? 2 years, done. Like, oh, okay, let's chat about this and see how we're gonna do this.
Yeah.
So definitely, it's top of mind for a lot of people, and they wanna do this, and I think it's this culture that we see on YouTube where everyone's paying down their mortgages and this and that means better times ahead kind of thing. So definitely there are some good reasons to do it, and there's probably some good reasons not to do it, and I think maybe we can talk about that a little bit later on. But ultimately the goal of paying down your mortgage would be just to save interest and save time. So you save that interest by essentially saving time, and that's done by paying down your principal faster. So that fancy word principal is just basically like your original mortgage amount. That's what you want to pay down.
Yeah.
So there's a couple of them. The biggest one would be lump sum payments. This is going to be dependent on the lenders. So everything is dependent on the lender terms. Okay. Even one lender can have multiple products that have different terms. So your mortgage broker will be able to guide you through what might be a better option for you depending on your goals, right? So definitely have that conversation, right? You want to talk about your goals. What do you want to do in 2 years, 5 years? Do you get bonuses? Do you not get bonuses? Are you hourly? These all things matter as to like, your options to pay down your mortgage. Mm-hmm. So the basic one is lump sum payments. Some lenders will allow you to do 10% of your original mortgage amount, your principal, up to 20%. So that could be pretty substantial amount of money depending on the size of your mortgage. Some lenders allow you to do it like one time a year, more restrictive, usually at like on the anniversary date. So your 1 year, your 2 year, whatever.
Okay.
And some will allow you to do like multiple. You can do like 100, as long as it's like $100. Usually that's across the board. $100 is the minimum. And you can do them at any time. They get applied to your next payment. So again, you can have different options with different lenders. If you're somebody that might want to do is doing overtime hours where you're constantly getting a little bit more that you can sink into your mortgage, do the option that's more flexible. If you're getting your bonus money once a year, then maybe the option where you do it like once a year is going to be okay for you, right? So really tailor that mortgage. That's going to be one of the big ones. So, I think the biggest thing is like, that sounds great, but where am I going to get this money from?
Yeah.
Sink into the mortgage, right?
You got to get that YouTube money. That's what shit.
Yeah, exactly. Right. So, I mean, there's a couple of things that come to mind. Bonuses are one of them. If you are somebody that can get a bonus or, normally receives a bonus and want to put it into mortgage, that's one source of money. Tax refund. This is especially a good time for that. If you're getting a tax refund, you can do that. If you're looking to get an inheritance, or if, like I said, you have overtime hours, holiday money, birthday money, things like that, you can put all that in, right? So it doesn't have to be huge. It just has to be something. Even if you don't want to use it, then you don't have to use it. But minimum $100 is usually what it is.
Yeah. I know you said each lender is different. Is there sort of like a minimum and sort of like a maximum amount that you're allowed to put down? Like I know, like the bank sort of has their numbers that they want to get out of it. And I know sometimes it's roughly 10% of the number, but is there some mortgages that go more or less, or like, do you recommend like putting more, like a couple $100 more down or every month towards it? Like, is that a stipulation? Like some mortgages can do that, some you can't. Is that?
Yeah, definitely. So I mean, that goes back to the terms of the lender, right? And so, like you said, usually there's a couple of banks out there that only offer 10%, which 10% is a lot of money. So, I mean, let's be honest, if you're not getting a huge bonus, you're not getting inheritance, probably that's going to be more than enough. but some will go up to 20%. Some may go higher depending on your basically like your status with that lender. If you do banking with them or you do something else, or maybe you just basically ask your mortgage broker to ask for it. Some might be able to go more than that, but generally it's between 10 and 20. And like I said, the frequency at what you do is also going to be lender based. So they might just give you the option like one time a year. You might be able to do it on the anniversary. You might be able to do it at any time during the year, but only once.
Yeah.
So then you got to like, save everything until you
your extra $100.
Yeah.
For that one time.
Or you can just do it, in small increments, minimum $100. And again, this is not something you have to do. It's something that you can do if you want to, just like, any kind of financial thing. So again, it all kind of aligns with your goals. So yeah, lump sums are probably going to be the most frequently used type. And I say that, and I just kind of double back myself, is probably the most useful or the most used type of prepayment option is the one that you don't even know that you're using. So let me qualify
the automatic payments that stay the same and just
yeah, basically. So when you set up your mortgage, most mortgages have the option of doing like a payment frequency of like a monthly payment, a bi-weekly payment, a weekly payment, right? Sometimes they have like semi-monthly, weird kind of things. And so monthly is the default, right? It's the default kind of payment. Now, I hear this a lot where saying, hey, if I pay my mortgage as a bi-weekly payment, that means I'm going to be like hammering down the interest and I will be mortgage free faster.
Is that because you're making one more payment a month or like every other month or something like that? You're making one.
Yeah. So this is where it gets confusing, because a regular bi-weekly payment is just a frequency change. So let's kind of put it into numbers. Let's say, for example, you had $1,000 monthly mortgage payment.
Yeah.
That means that over the course of a year, you'd make $12,000 worth of payments. Okay. Yeah. So how is a bi-weekly payment calculated? You just take that 12,000 and you divide it by 26, because there's 52 weeks in the year. Bi-weekly would be half of that, so 26. Yeah. So essentially, when you do a bi-weekly payment, a regular bi-weekly payment, you're paying just the $12,000 as you would with a monthly.
Yeah, so it's just smaller amounts over like a little
smaller amounts. And so people would do that because it lines up with their payment, right? So if they're getting paid on a bi-weekly basis, it might make sense for that. Mm-hmm. So that is really more geared towards like convenience. Now you will see a slight interest savings when you do it like that, because like you just alluded to, is that you have compounding, and the more frequently you pay, especially earlier on, the more interest you're going to save. Now, when you do a regular bi-weekly versus a monthly, it's not going to be a lot. Like we're talking about like maybe a few $100 over 5 years kind of thing. It's not going to be substantial, but you might see it. Again, that depends on the size of your mortgage, a whole other things. The bi-weekly that most people think about is something called the accelerated bi-weekly. And in that case, like you were saying, Jeff, it's essentially like making one more payment in the year. So instead of 12 $1,000 payments, you're making 13 $1,000 payments.
Okay.
So, yeah, and this accelerated bi-weekly option is not really offered as an accelerated monthly option, because you only have 12 months, so you can only make 12 payments. But the accelerated bi-weekly, they take those $13,000 that you would be paying because of that extra month, and then just split it over the 26 weeks. Mm-hmm. So like, let's say, for example, you had, let's go back to that like $1,000 example. For a monthly payment, it would be $1,000 a month, right? For 12 months, 12,000. A regular bi-weekly would be about like $462 bi-weekly. And then an accelerated bi-weekly would be about $500. So that $38 difference is going to give you an extra month payment, and that's going straight to your principal. Okay. So when you look at your amortization, like let's say, for example, you're signing up for a 25-year total life of your mortgage.
Yep.
After 5 years of paying, you would expect to be at 20 years owing, right? You start at 25, you paid 5 years, you have 20 years remaining. But in fact, when you do the accelerated bi-weekly option, you're actually closer to like 18 years and even maybe a little bit less. So you've been able to shave off like 2 years of your mortgage payment just by doing an accelerated bi-weekly, an extra $38. Again, it's going to depend on your mortgage, how much, all that kind of stuff. So the numbers are, not set in stone, but you will be shaving a certain amount of years off of that mortgage just by increasing your monthly payment a little bit. And that's definitely going to be the one that's most people are going to use without even knowing that they're making a prepayment towards their mortgage.
Because it's such a small amount. Well, relatively to the size of the mortgage, it's a smaller amount every month, as opposed to just the normal biweekly payment, right?
Yeah, and what we found is that when you're signing up for a payment, maybe some things will have to give, and it might be challenging in the first place. But I mean, look at now. Sometimes rent is more expensive than a mortgage, and property taxes, right? So you might have to make some adjustments going forward, but you usually get into the tune of things. You budget around that. You know how much that payment's going to be. Generally, if you're in a fixed or like a static payment variable, and you can budget for that. And so it doesn't really mean that much different. Maybe you save somewhere else, or maybe you got a raise or inflation. You got a raise due to inflation or whatever. So different things, but that's one of the more powerful ones that people use without even knowing, right?
Yeah.
Another one would be kind of in line with payments. So most lenders allow you to actually increase your payments on a yearly basis, or maybe like one time through the term of your mortgage. So again, like your contract with that lender.
Yeah.
It could range from 10 to 20%. So you can actually increase your payments, every year. And pay a little bit higher. So it's kind of like making that accelerated payment. Now, the nice thing about this is that if you get to a point where you're like, I can't make these payments, I just want to go back to the original one, you can do that. Right? Yeah. It's nice. It's nice like that.
And that's one of the mortgage terms, right? Like that's like the terms in the mortgage that's different with every lender.
Yeah. So most lenders will offer something along that lines. Kind of the standard ones are like the lump sum and also the increase in payments.
Yeah.
There are some like more niche ones where you can like double up a payment. So instead of doing like a lump sum, you can just essentially double your payment at any time. Yeah. So they do things, in different ways to help things. But it's all dependent on your lender. Even within a lender, different products will have different terms. So it's really important that you know what you're signing for. And I'll get to that in a second, because that could bite you a little bit. Mm-hmm. So I think one of the things that we were talking about on a call was when it comes down to renewal time.
Yes.
And maybe, renewal time is one of those opportunities that a lot of people don't take, and they really should, because usually at renewal time, you might get a slip from your lender and say, hey, we like you as a client, sign here for this rate, and we'll all be done. But it's a great time to shop around. And most of the time, you could probably get better rates or even better terms. And if you're getting a better rate, that means that your payment might actually go down. Mm-hmm. But like we were talking about before, if you keep your payments the same, then you're already making a prepayment, right? And that's going straight into your principal, reducing your total life of your loan, and then reducing your interest. So that's a really nice thing as well. So, I mean, go ahead.
Yeah. So like it makes sense that like each one is tailored different, and you sort of have to, look out and read, what you sign. So like, what are some of the things people should look out for when they're thinking about paying their mortgage down faster, and looking at their mortgage contract and trying to figure it all out?
So first things first is make sure you have a good broker that's going to do this for you, right? I coming into this industry a long time ago, I was kind of on a mission to demystify the mortgage thing, because I feel that it's purposely confusing. And when you sign a commitment, like all banking stuff, whenever you like open up an account, it's like 50 pages of legalese and this, and you're like,
I just gloss over.
Yeah. Like, I don't want to read this. I don't even know what I'm reading. Right. So have a broker that kind of just breaks it down for you and says, this is what you can do. These are your parameters. And I think that would be the most important thing. Now, with most mortgages, you're going to have like a mortgage loan agreement, which will by law spell out your prepayment options. But again, those things can be a little bit confusing. So just make sure you spend some time with your broker or your agent or your bank specialist, whatever, to go through those to make sure that you know exactly what's going on. Now, one thing that people don't know is that you can just call up your lender and say, hey, I want to make a prepayment. How much can I make? And that's a really good habit to get into. Like you might be on hold depending on who your lender is for a little bit of time, but it's going to be so much better than having to pay a penalty if you overpay.
Yeah.
So that's one of the things that you want to watch out for is whenever you're going to be paying more than your regular amount of contracted payment, your money or whatever, always make sure you're not going to be overpaying. Like literally, if you can pay $10,000 and you pay $10,000.01, you're going to be paying a penalty.
Oh, wow.
Right? So it's that strict. So you want to make sure you have it down to the cent and even just go like a little bit lower, right? There's no point in going right to the cent because as we've heard with mortgages, there are pretty intense penalties. In the fixed realm, you have something called the IRD, or the interest rate differential, which could be like tens of thousands of dollars based on, you know, your mortgage amount and how many months you have left. On the variable side or adjustable side, you have 3 months interest. Most people think that those only kick in when you sell the property or you break your mortgage to refinance, but they also kick in if you pay 1 cent over your prepayment options, right?
Wow. Yeah.
Yeah. So you definitely want to be careful with how you do this and, you know, have that conversation, spend the 10 minutes on hold with the lender or talk to your broker and get them run through the numbers and make sure you're under that, right? So that's one of the key things.
So is that similar to like an example of something you shouldn't do or you should be sort of like aware of? Like, are there certain things? Is there certain things other than that one that you have to sort of be aware of? And examples typical like that one that you just mentioned? Is there any other?
Yeah. So I think that that would be definitely one of the things that you want to be aware of. And again, like as with anything, having the awareness of what you can and cannot do is the biggest thing. Because the worst thing you want to do is make an assumption of what you can do. Every single product, every single lender has its own terms. And, you know, in the mortgage world, everybody has an opinion. And so you'll talk to every member of your family and be like, well, we have this and we have that and we have that. And then all of a sudden you think that you have that as well. And you might be actually requesting to be signed on to another product that maybe doesn't have that prepayment option in lieu of a lower rate. Yes. Right. And so you want to make sure that you know exactly what you have. You will have it in writing, but again, make sense of it. So spend a couple minutes with your broker, your agent, whatever, to go through that. So that's, again, just one thing to look for. Know what you have, know what you don't have, and kind of stick within those guidelines.
Yeah, I guess it sort of wraps around right back to the beginning. Is like right when you call the mortgage broker and you have plans to do these things, just let them know ahead of time, and they could sort of steer you in the right direction and give you the right terms or find you the lender that will allow you to pay it down sort of in the way you want, right?
Yeah. And honestly, like this is the hardest lesson to learn for some people. Again, everyone has an opinion. Everybody listens to how mom, dad did it, grandma did it, whatever. Mortgages have changed. They've evolved. They are different. And everyone's situation, I'm going to be honest with you, I have not had one client in all the years of doing this that is the exact same situation as somebody else. Everything is slightly different, right? So you want to make sure you choose that mortgage that is right for you. And so, you know, make sure that you are talking about this, you know, candidly, you know what you're getting into, talk about your goals, and, you know, a good broker, a good agent will be able to offer these options. Now, if you go with one lender, like particularly if you walk into your bank, they only have one option, right? So that might just be if you have a loyalty to that lender for some reason, you're only going to get that option. And they're not bad. It's just, there are other options out there. So make sure you're doing your homework, make sure you are getting something in line with what you want. And I guess that might go into a good point of like, why would you do this? Like, why would you?
Is there is there any situations where you might not want to, you know, pay down early? Is that something like, because it might not always be a good thing. You know, everyone talks a big game, but at the end of the day, like it really comes down, like you said, to the individual person. Sometimes, you know, it might not be the best. Is that like, is there any situation similar like that, or?
Oh my goodness, yes. Right. Like you go on YouTube and everyone seems to be paying down their mortgage. You go onto like the mortgage book section of the thing and everything is like pay down your mortgage faster, right? Yeah. It's not, there's no book on pay down your mortgage slower. It's always faster, right? So you get this idea that this is the only way you do it. You gotta put as much money as you want. So, you know, some good reasons of why you do this is obviously you're going to be paying less interest overall. The shorter your loan is, the less time there is interest able to accrue on the balance. And so you save on interest. Like that's a huge thing, right? Saving interest is a huge thing. The other part to it, and I was just reading, a book. I forget who the author is, but it's called The Psychology of Money. And the author was saying something, you know, most decisions we can talk about in financial terms. Like, yes, it makes important sense to take this money and invest it. But sometimes you just want the psychological feeling there. Like, and that's more important than getting the gains, right? So it might not always be right, but it is right for you. And that was the term, that was the kind of thing that I picked up from that last chapter, is that it might be right for you. So you might have advisors saying that paying down your mortgage is a foolish thing. You should be taking that money and investing it and getting a gain. But if you're somebody that hates debt and you can't sleep at night because you have this hovering over your mind, and you're just like, I want to be debt free, you don't want to have that payment, then that's a good option, right? Forget about what everyone else is saying. If it's good for you, then it's a good thing, right? So that's one option. And then like, think about it too. Like, imagine not having a mortgage. What could you do with that money? If you are all about lifestyle and traveling, wow. That's
a trip every month. At least.
Oh my goodness. Right? Or like one amazing trip to some wonderful destination that you've been dreaming about, or even, you know, having like investing in community or investing in this or charity or whatever.
Anything you want.
Anything, right? So you have that flexibility. And I think like as we get older, it's really about options. Like when you have those options, when you have that mortgage and you're tied to that payment, you know that everything revolves around making that payment, because if you miss that payment, it's like, you know, everything will fall from the sky. Then not having it is wonderful, right? So those are reasons to do it, right? Lower interest, maybe a little bit more psychological freedom, and then definitely freedom with your cash. But I think the more important ones, and the ones that probably most people want to hear, is like, why wouldn't you do this?
Yeah, right? Why? Yeah, what situations absolutely do not want to pay it down? Well, I want to hear that, because again, that's not what a lot of people hear. They always hear, pay it down now, do it now, faster. But like I said, let's get down to the nitty gritty and find out what are the occasions that you don't want to pay it down.
Yeah, it's definitely, that's the intriguing one, because it kind of goes against maybe this is like a good YouTube title. Don't pay down your mortgage, right? Go slower. Don't pay. Don't stop paying, just don't pay as fast. So one of the biggest things, obviously, if you are an investor or you invest your money in any single way, there is the lost opportunity cost, right? So if you're sinking in tens, hundreds of thousands of dollars into your mortgage, where you're being charged an interest of like 2%, you know, people are freaking out right now because interest rates are like 3-4%. Like, talk to somebody in the 70s when interest rates were 17-18%, right? 2-3% is free money. Like, yes, the mortgages are higher, your interest is going to be higher, but you know, think about yourself. I always say this to people that you know discuss this, is would you lend your own money at 2%? No, I wouldn't lend my own money at 2%, right? So the opportunity cost there is like, do we put hundreds of $1,000s and save the 2%, or do we put that $100,000 and put it into an investment that might give us 6%, right? So
take your money out and then use that money from the equity in order to buy something else, or have it work somewhere else other than just in that one vehicle.
Yeah, and you don't even have to take it out. You just basically you know, the money that would potentially go to a prepayment just go somewhere else, right? So there's that. And again, that's if that's something that interests you, talk to your financial advisor about that. They'll be able to figure out ways that you could grow your money in that way. So opportunity cost is definitely a big thing. On a mortgage perspective and a real estate perspective is talking about rentals. Okay. So if you own a rental, and again, this is now an accountant question, so take what I say with a grain of salt. I am not a accountant.
Yep. Step up to the lane.
I speak from my own experiences. But if you have a rental, you can, a portion of that interest can be written off on your taxes. And so that helps bring down your overall taxes at the end of the year, and you'll pay less taxes on that, right? So your brings down your overall income and you pay less taxes on that. So in that kind of case, you might not want to actually reduce the amount of interest, because that is a write-off in that case. Same thing if you're business for self and you have a home office, you can write certain things off. Right? So that might be a way to bring down your income and pay less taxes. And so by paying more into it, you kind of negate that, right?
Oh yeah. Makes sense.
Right?
The quicker you pay it off, the less you could do it, right? I guess.
Yeah, exactly. Right. So, and then another kind of misconception that people say is that if I sink in money into my mortgage, I'll be able to qualify for another property later, right? Because my balance is going to be less.
Yeah.
But the way that we qualify, and this is a huge misconception, I actually just had a call with somebody about this, is that even though you bring down your total balance, your payment stays the same.
Mm-hmm.
And your payment is what we actually use to qualify you for the next purchase.
Okay.
So if you're going to be sinking money into your mortgage and your payment doesn't change, your qualification won't change. Same thing if you have a car and you want to pay down a fraction of that car. It's not going to do anything because your payment stays the same. The only way to get rid of that payment is by completely paying off the car, gone off your credit bureau, right?
Yeah.
So sinking money into these things that's not going to affect your payment is not going to help you qualify for the next thing. So that's a pretty big one. And then I guess some of the last ones would be like, if you have credit card debt that is charging you 20%, pay that down first, right? Pay that down first.
Yeah, your mortgage is 3%. Your credit card debt's 19.8% and climbing.
Yeah, definitely get rid of that. I think the psychological relief of that will be one thing, as well as the financial savings of paying 20%, even on like $20,000. It's a chunk of money, right?
Yeah.
So pay down that high interest debt, lines of credit, credit cards, even like student loans or whatever, car loans, anything like that. Yeah. And then get yourself into a place, obviously keep making your regular mortgage payments, but it'll get you into a place that you'll just free up all this money. And then you can decide what you want to do with that next, right?
Yeah, that makes sense. Yeah, like pay off the higher interest ones first, and then, because I said the money's still rather relatively cheap compared to older times. So if you got the car loan that's at 15%, 13%, pay that off faster, so that it frees up that monthly payment, right?
Yeah, definitely.
Wow, it's a
lot to consider.
Dropping nuggets of gold here today.
You know what? It's a lot to consider, and this is why, like, having a lot of people when they first come into a mortgage meeting with a mortgage agent, the Canadian thing to do is not really talk about your finances. We don't. That's, as a society, we don't do that. But when you talk to a mortgage broker, like, give them all the information that you have, as well as your goals. Sometimes when I have conversations with my clients, they'll be like, why are you asking me 5 years? We just got married. You sound like my mother asking about children. And it's not like me being intrusive, right? But it's about like trying to figure out what we can do right now to help you as well in the next 2, 3, 4 years, because we're not talking about a small amount of money here. We're talking about a big chunk of money that you are basically going to put a large chunk of your income into. So we got to make sure that, we're not only going to support you right now, but also in the future. If you're going to get those bonuses later, then maybe get a product now that will allow you to have that flexibility in that room to kind of thrive and do what you want to do. If, paying down your mortgage is not an option for you, or something you don't want to do, that's fine as well. Then we'll figure out another product for you. Yeah,
I guess you just have to, find the right mortgage broker and make sure that you're open and honest with them. That really comes down to, again, how you feel around them, and know if you trust them and like them, and that they have your best interest at heart. You're not going to be really holding that information back, but you're going to be like, this guy's here to help me. Okay, let's get it's all about having the right people on your team, right? And I can't stress this enough, just as in our other videos, whatever, like, find a mortgage broker like the one next door, right? And find out the right vehicle for you and what the best options are for sort of getting your payments lower and using that money wisely, right? Yeah, absolutely. Like you hit it on the head, man. It's all about your team, right? So from what you guys do, I know you guys always have the client's interest in mind, and it's always at the forefront. So I mean, it doesn't have to go far, man. Your videos are always about the community and stuff like that. So that is huge. If you can be honest with your team, your real estate agent, your mortgage broker, your lawyer, everything will go a lot smoother. If you're open and honest, right from the get-go,
and making sure you're getting things with, and things will change. Like, let's be honest, things will change as you see houses. You'll be like, I don't really need that, and I really need that, right? So things will change from that. And same thing as we get in conversations with mortgages, you might say, I don't really need that, but I do need that. That's fine. Let's have those open conversations so we can create something, you know, not only a product, but altogether an experience that's going to be really, really wicked for you.
Yeah, get that plan in order and execute it. And they say that always plan for the next 5 years out, even though, you know, it's just we take it 1 year at a time, but those 5 years truly fly by.
Oh my goodness, yes. Yeah.
All right, well, like, I think that's it. Is there anything else you think you might want to add to this? Because like this has been pretty informative, and I think again, I've always learned a lot talking to you. So
no, I think that's all it there. So yeah, we'll see you next time.
All right, guys. Yep. Thanks for tuning in. Until next time. Again, thanks, Yark, for filling us in and letting us into your brain and your mortgage knowledge. So again, guys, be sure to catch us next time. If you like this, sure do hit the subscribe button. Please like, share, and comment down below. Let us know what your options are on what you're thinking about, if you want to prepay your mortgage down faster, or if you guys and how your mortgage is set up. I'd love to hear your opinions down below. So again, Yark, thanks for joining us. Until next time, take care, man.
Yeah, bye.